Canada's economy is sending a warning signal, and experts say this could be the beginning of a much bigger problem. For months, people heard about trade wars, tariffs, and economic uncertainty, but now those problems are starting to show up in the real world. The latest numbers reveal that Canada's economy has stopped growing. Think about that for a second. An entire country's economy stuck in place, not moving forward, not creating enough momentum. And for many Canadians, that could mean tougher times ahead. So what went wrong? One major reason is trade. Canada sells a lot of products to the United States, but new tariffs and trade tensions have made it harder for some businesses to operate. Exports have started falling, especially vehicle exports. And when companies sell less, they usually spend less. That's exactly what's happening now. Businesses are cutting back on investments. Many are delaying expansion plans. Some are choosing to wait and see what happens next. And when businesses stop investing, jobs are usually the next thing affected. Now let's talk about the job market. This is where the story becomes personal. Canada's unemployment rate has climbed to 6.9%. That means more people are looking for work. But the biggest shock is among young people. Youth unemployment has jumped above 14%. Imagine graduating from school, searching for your first job, and finding thousands of other people competing for the same opportunity. That's the reality many young Canadians are facing right now. The job market isn't crashing, but it's definitely getting weaker. And that's making a lot of families nervous. But here's something even more surprising. People are still spending money. They're still shopping, still going out, still paying their bills. So what's the problem? The problem is that many families are doing it with less money saved. Canada's savings rate has dropped to one of its lowest levels in years. In simple words, people are using more of their savings just to keep up with everyday life. And when savings start disappearing, financial stress usually isn't far behind. Now all eyes are on the Bank of Canada. The country's central bank is trying to prevent the situation from getting worse. Officials recently decided not to change interest rates. They're hoping the economy can recover on its own. But they also admit there are serious risks ahead. Too much pressure on businesses could slow growth even more. But lowering rates too quickly could bring back inflation. It's a difficult balancing act. And right now, nobody knows exactly how it will end. Investors are paying close attention too. After the latest economic report was released, financial markets reacted immediately. The Canadian dollar lost strength, and confidence took another hit. Why? Because investors aren't just worried about today. They're worried about what happens next. Will businesses keep cutting back? Will hiring continue slowing down? Will families spend less money? Those are the questions keeping economists awake at night. And there's another problem hiding in the background. Government finances are becoming more strained. As economic growth slows, governments collect less tax revenue. At the same time, more people may need support. That creates a difficult situation. Spend more money and increase debt, or spend less and risk slowing the economy even further. Neither choice is easy. So what happens now? If conditions improve, Canada could recover slowly over the coming months. Businesses could regain confidence, hiring could increase, and growth could return. But if trade tensions continue, if unemployment keeps rising, and if businesses remain cautious, the slowdown could become something much more serious. Here's the bottom line. Canada is not facing economic collapse, but the warning signs are impossible to ignore. Growth has stopped. Jobs are becoming harder to find. Businesses are pulling back, and families are feeling more pressure. The next few months could decide whether this is just a temporary slowdown or the beginning of Canada's biggest economic challenge in years. And that's why the entire country is watching very closely.